Hello and welcome to Peer-to-Peer Trades. I'm your host, Justin. We keep things simple here on the channel. If you're here in the bear market, welcome. You're a bear market survivor. You're probably going to do well if you've made it this far. If you're new here, I do want to invite you to subscribe. We take a very objective approach to the markets. No hype, no bullshit, no FOMO, none of that stuff. We just look at the facts that we see in the charts. We take a very objective and zoomed out approach to the macro moves of crypto. Only the big moves matter. If you're new here, I want to invite you to subscribe. And without any further ado, let's get into TA. So we're starting off with the king of all crypto, that is Bitcoin. We are in this falling wedge formation. We're also like schooling Tetras. Yeah, we stick together, a tight school of Tetras. So we're in this falling wedge formation. It's a bullish pattern, but you need to take into consideration the market environment, right? The market environment is bearish. So when you see a bullish consolidation in a bearish market environment, what it is signaling to us is just a change of behavior, a change of direction, a change of character. Now, this is one of the things to look out for when analyzing charts with the Wyckoff method. You're looking for this change of character. And that would be the difference between this brutal, relentless downtrend to this pivot right here. We changed. We have a new type of price movement, a new type of structure, and it's showing a little bit more characteristics of accumulation. Now, accumulation doesn't mean we're ready to move. Accumulation doesn't mean we're ready to, we're off to the races or anything like that. It just means that we have the ability to slow things down. We have the ability to change the structure, and we can begin to go into that DCA environment. In my opinion, we are in a dollar cost average environment, and I've been dollar cost averaging for the last few months. So, that's the environment that we're in. It doesn't mean that the bottom is in. It just means that the price behavior is showing us that we are in that type of environment where it's advantageous to begin the DCA practices. Now, what to look for a bullish move here, which I'm not counting on. I actually think we're going to come down and visit the lower end of this falling wedge here. But if we did break above this falling wedge, there could be a little bit of a bear market rally. I'm still watching this 30K level. Lots of confluence at the 30K level. It still is very strong resistance right now. So that would be, if we did get some sort of bear market rally, I would be looking to the 30K level for a conclusion of that rally. No point in talking about a rally right now because there's not much of a bullish leg to stand on. We're still just in this consolidation. So, very advantageous points to be buying at the bottom of this falling wedge. So anytime you're down there, it could be a very good day to DCA, but not much as far as aggressive trades with aggressive stops. We're still in a downtrend. If you're placing trades with stops in a downtrend, the likely outcome is that your stop will get hit and you will lose those funds. Taking a look at momentum using the alpha numerics indicator, wave very clearly red here on the 3-day chart. We have the 50, the 30, and the 7 all in bearish alignment. And when we take a look at the local price action, oops, didn't mean to turn that off. We take a look at the local zone here. We are struggling with the 7, so we're really battling with momentum right now. My thought here is that I think we do get a rejection here at the 7 and revisit the bottom of this channel right here, probably around $15,000, something like that. 50 points in, we could break up for a couple days. Yeah, it's plausible. The only thing that, and we'll cover the indexes, the equity indexes in a moment, but the only thing is we have way less demand in crypto, way less demand. Equities still has a little bit of demand. There's still some speculative demand that can go towards the equities and the indices, but that is not translating to cryptocurrency. Cryptocurrency is pretty much dead as far as transactional volume, as far as open interest and public interest. So take a look at that tweet later, BTC player. So let's move things over to Bitcoin, Ethereum. How is Ethereum performing against Bitcoin? And with this chart, I'm going to turn off alphanumerics, and I'm actually going to go to a line break chart and just demonstrate how neutral this consolidation is. So you can see here, this entire consolidation, we're just chopping. We're just chopping. Sometimes we're oversold, sometimes we're overbought, oversold, overbought, oversold, but we're range bound. So to me, what this means is it doesn't matter if you're investing in Ethereum, and it doesn't matter if you're investing in Bitcoin, because over a longer time horizon, the gains are the same, the performance is the same. The volatility of Ethereum is obviously more because Ethereum is an asset that moves quicker. But in the long run, you know, when you add up all the extended rallies and the extended reactions, you end up in the same place over a long time basis. So if you're a long-term investor, you might want to take that into consideration, that you're really not outperforming Bitcoin. You're just lockstep with the performance of Bitcoin. And then furthermore, I actually don't, from a technical point of view, let's move it back over to the candles. I don't actually like this consolidation in terms of its structure, because it shows characteristics of distribution going back to kind of the Wyckoff method of things. Now, we are looking at the Bitcoin pair, so you do got to take distribution and Wyckoff with a bit of a grain of salt, because Wyckoff is really, it focuses on the herd mentality and the herd actions, and the herd focuses on dollars. They don't focus on sats. But be that as it may, you know, we had this structure. We broke below the structure. We bearish tested it, and I wouldn't be surprised to see an LPSY rounding us over and taking out that 0.05 BTC per ETH. So watching out for that. If we get a clear break below 0.05, then, you know, we could be entertaining any ranges down in this area for the support range here for Ethereum against the Bitcoin pair. Taking a look at Litecoin. We'll turn alphanumerics back on for Litecoin. Litecoin, not terrible, honestly. The EMAs are flipping into bullish alignment. We do have a green wave here on alphanumerics showing that the bulls are in control. It's probably just a FOMO rally, a bear market rally, a narrative-driven rally. It's not fundamentally driven. But hey, a rally is a rally. So I would be looking for a retest somewhere around the $60 to $65 level. If we can hold on top of those EMAs at around $65 and give a turnaround, you know, a structure like this where we come down, consolidate a little bit, and then give a turnaround, some sort of breakout, whether we form a pennant or a flag, whatever the formation happens at this point, you just watch for that breakout. And once you get that breakout, that's your entry there for Litecoin. Cardano, really, really low momentum here on Cardano. Stuck below the 7 on the 3-day, so the momentum is really, really low. I mean, there's nothing really bullish to talk about in Cardano. Price action is low, spread is low, momentum is low. EMAs are in bearish alignment. No bullish narrative that can be spun for Cardano as it stands right now. Then we'll take a look at BNB. Now, BNB is the clickbait of this video. Is BNB ready to crash? Looking at here on the weekly, this is a shitty chart. I mean, it's really, really shitty. There's a few key points to take a look at here. Most notably is just this structure right here. We are getting serious rejection here. You can see the tails here, the supply tails on these candles here on the weekly chart. There is a ton of down pressure. Not only that, but the structure that is forming as a result of these rejections is kind of a rounding top. You do not want to see rounding top formations, especially when they come in a break of downward structure. So we have broken to the downside. We have a structure that is forming that is very similar to what would be classified as an LPSY, last point of supply. This is the last area of consolidation before a breakdown. Lots of laser eyes on the 250 level, and then below that is the 200 level. Let's actually clean this up a little bit. Keeping a lot of focus here at the 250, and then the 200 is the last point. Like if we take out the 200 level, it's fucking lights out. It is lights out for BNB, because as you can see here, No structure whatsoever has been built on the way up. There is nothing holding BNB up above $200. So, you know, if we take out 200, there's nothing till you hit $50, which would be devastating to the market. A lot of people have been flocking to Binance since the FTX debacle. There's a lot of trust going towards Binance. Now, with the transparency report, people are starting to question it, and it's just like, guys, come on. Yeah, like, what do you need to do? Like, how do you need to move forwards to fucking learn that, you know, no exchange can be trusted, especially in a bear market. In a bull market, you can probably throw caution to the wind with a lot of these exchanges, because the exchanges are making so much money that they can lie very easily. But when you're in a bear market and liquidity is low, now the exchanges can't lie anymore. They can't fake it. So you're much more exposed when you're in a bear market liquidity environment than you are in a bull market liquidity environment. Bull markets, they fake it till you make it, man. Fake it till you make it. But bear markets, they're gonna fucking break it. The demand here in the volume is abysmal, pitiful, disgusting. Nobody wants it. Nobody is trading this stuff. So there's a lot of red flags here for me with BNB. I would not be surprised to see this one fall to fucking $50. You heard it here first. $50 for BNB is my target. Taking a look at the dollar. Dollar is trending below this level here. It is slowing down. I wouldn't be surprised to see the dollar come up and retest this area of the ice line back here. This is kind of our Wyckoff support range that we broke. So kind of a rally up to kind of the 108 area on the dollar. But as it stands right now, we have a lower high, lower low structure. So the assumption is lower levels here, but we are showing a little bit of a bullish divergence. As you can see right here, we are making lower lows, and on the RSI, we are making higher lows. So there is a bullish divergence. I expect an up move at some point. S&P 500 still trapped under this resistance point. We did reclaim the level here at 3,900, and we might be able to break above. If we can get above this line right here, break above this line, that'll be bullish, but as long as we're below it, we are bearish. Same sort of story here on the NASDAQ. As long as we are below, as long as we're below this line right here, we are bearish, but as soon as we get above it, we are bullish. So until we start to see that stuff, that's all we got. We're bearish until proven otherwise. That is all the time I got for today. If you guys enjoyed this content, please leave it a like. Don't forget to subscribe. And if there are any other projects that you would like me to take a look at, leave them in the comments section down below. And until next time, please trade safe. This has been Peer-to-Peer Trades.